Hey Jen, how is it going?
Good, Maria. How are you?
Good. We had a bit of a hiatus, but we're back.
I know, we're back.
Yeah.
You can't get rid of us.
No.
Nope.
Yeah, certainly not. They've tried, but they can't.
That's right. What's going on?
Oh, well, today it's a bit of an unconventional topic. I
Here we go.
wanted to talk about alternative financing
Okay,
options.
cool.
Three in particular. We've had several deals come in the last couple months. Asset depletion,
Yep.
bank statement loans, and debt service coverage ratio, or
Yeah,
DSCR.
Yeah.
So let's start with asset depletion. What is
Asset depletion.
that?
Okay, so let's talk about asset depletion that's not Fannie Freddie, because Fannie Freddie have their own asset depletion. There's rules for that. We can talk about that some other day. So asset depletion, and we have a couple different investors who do it, and they all have slightly different rules. But basically, you're taking your assets, whatever it is. Say you have, I don't know, $2 million in your retirement account. We're looking at that $2 million, and we have a calculation that says $2 million divided by X, whatever that is. Each investor has a different X. Say it's 120.
What is the X? What is that representing?
We're just dividing that by 120. That's just the calculation that the investor uses to come up with what we use as your monthly income.
Oh.
So you take that 2 million divided by 120.
Oh, so 120 months.
Right.
Oh, gotcha.
Yep.
Gotcha.
And then that's your monthly income. So, $8,000, whatever it is, and that's your monthly income, and that's what we use to qualify you. So on many of them, there's no age restriction. So Fannie Freddie, there's age restriction rules in there. On these, there typically is no age restriction rules. So, let's say somebody just turned 21 and they just got a whole chunk of money from their grandparents' estate who died, when they were younger or something like that. And now they have this big chunk of money, but they don't work. They're in grad school or whatever. We can look at this chunk of money that they just got, and that's their income.
Wow.
We use that calculation and come up with their monthly income. So
What's the downside?
yeah, the downside, you need 20% down. You need good credit scores. I mean, any of these programs that we're going to talk about today, you really need better credit scores. You don't need the best credit scores for bank statement programs, what we're going to talk about next. But you do need good credit scores. 20%, almost 20% down across the board on these programs. And the rate's going to be higher. No free lunch. We talk about no free lunch all the time. You want a program that's outside of the norm, and you're asking for, a favor. You know what? I don't have the typical job and the typical assets that, the industry is looking for. Okay, that's awesome. You know what? You're solid. You have 20% down. You have good credit scores. You know what? Here's a program that we're going to be able to put you in, but the rate's going to be a little bit higher.
Okay.
Yeah.
Okay.
Yeah. It's a
All
cool
right,
program.
so asset depletion, that's an interesting one.
Yep.
What's the difference, though, between asset depletion and a bank statement loan?
Yeah, so bank statement loans, and there's a bunch of them. Actually, there's some really cool ones that just came out with one of our investors. Bank statement loans, as long as I can remember and as long as they've been in existence, have been based on your business income.
Oh, okay.
So you're I don't know, a hairdresser, you're a hairstylist, and you have a bank account that's your business account. We do a 2-year. We can do a 1 or 2 year look
Yeah,
back
that's
depending
right.
on what works out better, what one fits into the scenario better, and we look at your deposits into that every month. And again, there's a calculation that they use. Often with those, it's 50%. Say you deposit $10,000 a month, we'll take 50% of that for $5,000, and that's what we consider your income.
Oh, okay.
The issue, I don't know if it's an issue, but the issue with those is they typically want you to have been self-employed for 2 years.
Okay.
So you need that 2-year history. Even if you do a 1-year bank statement, they still want to see that you've been in business for 2 years. It doesn't necessarily have to be the same business. If you've been self-employed, first you were, I don't know, you sold shoes.
Yeah, that's a thing.
And then you sold dresses.
Okay.
That's okay, as long as you can show that you've been
Similar.
self-employed. Yeah, there's usually ways around it. The cooler one that I ran across recently is a personal bank statement program. Mm-hmm. So it has nothing to do with your work income. It's just deposits into your personal account.
But
and it's kind of the same because you're thinking, okay, my work money is going in there.
right.
And it is, but we don't have to see that as directly tied to your work income. There's no 2-year history on the employment.
Okay.
Like the one I'm working with right now, he worked in a certain industry for a company for many, many years, and he's like, you know what, I'm sick of busting my butt for this company, I'm going out on my own. And he's only been out on his own for 4 months. But he's doing really well.
Got it.
A ton of income, but he doesn't have that 2-year history of being self-employed.
Okay.
So we're doing a personal bank statement program. And the cool thing, or maybe the weird thing about these, is it's the numbers straight up. Whatever your deposits are, that's your monthly income. we're not doing a 50%. I'm sure there's some that are 50%, but this one that I'm working on with him, it's straight up. So it was like amazing. The guy was like, well, I talked to like 3 other people and they all said no, they couldn't do it. I'm like, this just fell in my, like literally the day before we had this announcement that this new program was out.
That's fantastic.
It's pretty cool. Again, no free lunch.
Right.
20% down. This person actually has a ton of money saved. I believe he was putting 60% down. So his rate wasn't as bad as you would have thought because he's putting so much down and he has amazing credit scores.
Okay.
So it definitely rewards better down payment.
Yes, great.
20, 30, 40% down, you're gonna get a better rate. But the guy's, he's like, I can't, this is so exciting. Like, he's like, I can't believe I can actually buy a house.
Well, these aren't the typical situations where, okay, the rate might be higher, you have a chance to refinance in the future because they are alternative financing. You're not really going to push that on them, the chance to.
We're not going to, but somebody like him would be a perfect candidate to refinance.
In the future.
Yeah, because in 2 years, he'll have that 2-year work history. Mm-hmm. We'll be able to look at his tax returns at that point, and we'll be able to flip them into a Fannie Freddie loan. Most likely, perfect. And he's going from 8%, and with any luck, rates will be maybe down in the 5s then, and the guy will be saving a ton of money. I'm just wishful thinking.
Amazing.
Wishful thinking.
I know. We can dream.
I do. These are the things I dream about.
Indeed.
Or maybe lay awake at night worrying about.
Yeah, right. Dream or nightmare.
I worry about all my clients getting good rates, but it's a pretty sweet program.
So my favorite of alternative financing, because I've done like 5 of these loans in the past month or 2 months, is the debt service coverage ratio, or DSCR.
Yeah.
This is where a person or an LLC, really, because you can close it in the name of a corporation
or
LLC, in person, was buying a property, and you don't have to show any income, no asset statements other than for reserves, but you're essentially using the rental income for that property.
Correct.
As your income.
Look at you telling me about the program. You're
Genius.
Absolutely correct. Yeah, it is so simple, right?
Yeah,
it's so
really
simple.
is.
It's stupid.
Yeah.
You're looking at your monthly income for that property, whatever it is. You're using the whole rental income based on it's coming from the appraiser, based on market rent,
or if there's an existing
lease, correct. And you're comparing that to the monthly payment.
Yeah.
And as long as it's equal to or greater than, as long the rental income is equal to or greater than that payment, you're good to go.
I love that. That's a great option for investors.
It is. And if you think about it, most investors own multiple properties. And they are usually doing a million things at once, and they don't have time to stop and give us a stack full of paperwork. Show us the lease on all these 10 properties. Show us your tax bill and your insurance bill and your mortgage on all these 10 properties.
Right.
We don't need anything on any of those properties. Like you said, we don't need any income. All we need is to show assets that you have your down payment and your reserves. And you do need reserves.
Yeah, like 6 to 12 months. Depends on the investor.
Right, and that helps your rate as well. The more reserves you have, it'll make your rate a little bit better. And it makes sense. We're giving you a loan just based on the payment and the rental income on it. So reserves are required.
So just for our listeners, reserves are where it's, just in case people don't know, it's where it's like your entire monthly payment times like 6 months. Right. We want to make sure. So if your entire monthly payment is, let's say, $1,500, which is actually...
Let's say 1,000. Let's say 2,000.
Say 1,000 for let's say 2,000.
Let's say 2,000. Yeah.
2,000 monthly payment times 6 months is
$12,000.
$12,000. No, you just
That's
beat me to it.
That's why I wanted it to be 2,000. I can't. 1,500 times 6. Yeah. I don't know.
So $2,000 a month. We need 6 months of reserve. So we need to show in your Bank of America account that you have at least $12,000
extra after you've paid all of your down payment closing costs.
Right.
Yeah.
So that's what reserves are. So sometimes we do need to show reserves, or it's good to show reserves.
Right. On these products, you almost always, especially the DSCR, you need reserves. Yes. Bank statements, you usually need 2 months. But again, on the bank statement ones, if you have other properties, you're going to need reserves for those other properties. Where on the DSCR, it's a little more straightforward.
Yeah, where it's just for
that property. Yeah. And again, that's a help. Mm-hmm. You own 10 properties and you need 6 months reserves on all those properties, like it starts getting crazy. Mm-hmm. It's a simple way to get into some rental properties.
Yes.
Yeah.
I love it.
It's so easy.
I mean, you wouldn't, though, recommend DSCR to just a regular, person who's wanting to buy an investment, or would it be for, somebody, who's got a bunch, or...
It's probably more for somebody who has a bunch.
Yeah.
Yeah, who just doesn't want to have to supply all that paperwork. If this is your first investment property, and you have more than enough income to support it, I'm always going to look Fannie Freddie root first.
Yeah,
because that's going to get your better rate.
That's right.
But sometimes it's just not the program for them. So then we look at DSCR.
I love it.
Yeah, and again, people can refinance out of this down the road when rates start coming down.
Yeah,
they can refinance out of it. And you made a really good point that you can purchase it in an LLC. Fannie Freddie do not allow an LLC, so sometimes that gets a little muddy waters there because people want it in an LLC and it's their business, so they don't want properties in their personal name. So I think sometimes they transfer it after closing, which I don't know if, again, we need that attorney in here to go over that, but they'll allow it in an LLC, which is pretty sweet.
It is. And we work with a great broker for these programs.
We do. And I closed one in less than 3 weeks last month. I mean, they're so quick.
Yeah.
We're getting appraisals back in 3 or 4 days, and really it's the appraisal. That's all we need.
Yeah.
If you think about it. So as long as that appraisal comes in, it shows the rental income where you expect it to be, or like you said, the lease.
So what happens in any of these cases if a property underappraises?
Yeah, that's a good question.
Same as like a regular situation?
Yeah, okay. Absolutely. So we can always contest it. Ask the agent to come up with information like, well, where did you come up with this price? Either the listing agent or the buyer's agent. The buyer's agent told their buyer to offer this amount. Okay, well, where did you come up with this number? Show me the comps that you used.
What are comps?
Comps, comparables. Houses that are comparable to the house you're purchasing.
Within a certain distance.
Whatever it is, the same square footage, same sort of house, square footage, same town, distance. And then we'll bring that back to the appraiser and have a discussion with the appraiser and be like, did you see this one? Give me your thought on this. We can't influence them at all, but we can have a discussion with them and be like, help us understand why we're where we are so we can go back to the buyer and say, this is where we are. And sometimes stuff is missed. Something just closed yesterday that supports the value, and the appraiser's like, this is awesome, thank you for the information. Cool. But if the value sticks, it's just like any other program. You can go back to renegotiating the price. You can come up with the difference. Potentially your financing amount is different now. You have to, like I have one right now where she was putting a whole ton down and it underappraised a little bit. It didn't change the financing. So we just got a letter from the buyer saying, I'm cool. It underappraised. I understand that. I'm still willing to buy the house. Okay. And we just kept moving forward on it.
Great.
So, yeah.
Tons of options.
They're fun little programs. There's more out there. You got to dig. I'm having a lot of fun this year. 2022 was supposed to be the year of the Alt-A loans, and I never got around to it. So 2023, I've really dug in and searched some of these programs, and it's helped all of us out. It's helped a lot of people be able to get into houses that normally wouldn't get into a house. So it's been fun.
Cool.
Fun. There's more to come.
Yeah, indeed. Mm-hmm. That's our motto.
Is
cool.
It?
I don't know. I guess it could be.
That's today's motto. More to come.
We're having fun. There's more to come.
There's more to come.
All right, cool. Thanks, Jen.
Okay. Thank
you.
Bye.
We'll
see you soon. Bye. Love you.
Love you. Bye.